What is up YouTube? I hope you guys are having an amazing day so far, and welcome back to another video on this channel. So today we're going to be looking at ordinary share capital and retained income, but specifically the notes to the financial statements, which I'm going to place emphasis on due to the fact that they ask the notes more than they do the general ledger for these two accounts. Alright, so I'm not going to waffle on for too much, shall I say. We're going to get right into the video, but I also want to give you some background information so that you know what these two accounts actually are for. Alright, so a company has ordinary share capital, but what is that? Okay, so this is the shares of a company that allows the shareholders to make informed decisions in a company's meetings, and also provides the shareholders with an income in the form of dividends from the profit that the business makes. Okay, so a company is allowed to issue shares to people, which will then help get input in terms of how to run the business, etc. And these people also earn a form of income called dividends, which is then paid out once all the business's expenses are covered. Okay, so a business needs to make sure that they're making a profit first before they can pay out their shareholders a form of income. Okay, they need to make sure they cover all their expenses first, right? However, a business can also retain some of their profits. Okay, and this is called retained income or retained earnings. Okay, so this is the net profit left over after the business has paid out dividends to its shareholders. Okay, so the company uses the money in a way that suits them, so they can choose to save the money, set aside an amount for unexpected future expenses, buy fixed assets, research and develop new tools and equipment. They can pay bonuses to people, reinvest the money back into the business, or even pay off their debt. Okay, just to show you the format of an ordinary share capital note. Okay, over here is how the total number of shares that the business is authorized to distribute. So it may not distribute more than this number of shares. Okay, so if this is 2 million shares, it may not distribute 2,000,001 shares, for example. This is the maximum amount of shares that the business is allowed to issue. Okay, over here we want to know what has the business issued and what has it repurchased. Okay, so what the business has issued and what the business obviously has repurchased. Okay, so these will increase our issues and this one will decrease our issues to give us our total issued at the end of the year. Okay, these amounts over here tell us what these shares issued were valued at. Okay, so what these shares were valued at. Okay, what the total value of the shares repurchased was, to give us our shares in issue at the end of the year and what they are worth. Okay, the total amount that they are worth. Alright, now please take note that this cannot be a negative balance. Never ever can it be a negative balance, because we don't have a negative amount of shares issued. Okay, the average price over here, when we talk about the average price, it mainly focuses on the shares repurchased. Okay, because what happens is a company uses a portion of its ordinary share capital to repurchase the shares, and then it also uses a portion of its retained income to repurchase shares. Okay, so you'll find shares repurchased in both notes. Okay, however, the ordinary share capital account will have the shares that are repurchased on the date at an average price. Okay, and how do we get the average price? We say the total value of the shares before repurchase divided by the total number of shares that were issued before the repurchase. Okay, and that will give us our average price per share. And if we bought 100,000 shares and our average price was 3 Rand, we would have used 300,000 Rand of our ordinary share capital to repurchase the shares. Okay, right, retained income. So if we look here, we have a balance at the beginning of the year. So this is the amount that we retained from the previous financial year. Okay, Then here we have net profit after tax. Okay, so we all know where we get this amount from. It can this amount needs to be put in here because we need to know what our profit is, okay, because part of the profit can be retained. All right, over here again, repurchase of shares. Now how do we calculate this repurchase of shares? Okay, so this is the difference between the market price, or the price that we bought the shares back, and the average price. Okay, so the average price we calculated in ordinary share capital. All right, we will do an example which will give you a clearer indication of what's going on here. It's just an outline so that you guys can see. Total dividends for the year is the interim dividends, so the dividends that has been paid plus the final or recommended dividends. This is the dividends that we declare but we haven't paid it out yet, okay, and that will have a negative effect on our retained income because we pay out after net profit. All right, and then obviously our balance at the end of the year is whatever income we have left over, which then we can choose to retain. All right, now let's just quickly have a look at the ledger accounts. So if we have a look here, we'll always have a balance on the credit side of ordinary share capital and retained income. We will issue shares, so we will receive money. Of course, we would also buy back shares, in this case in the average price, and this one would be the difference between the market price and our average price. Okay, then this amount here in brown is the difference between our opening balance and our repurchase price. Okay, so we want to know how much of our retained income at the beginning of the year did we use to pay for the repurchasing of shares, and that we're going to allocate over here and send it off to our appropriation account. Okay, now you'll see here on this side there's also appropriation account. Okay, and we calculate this pink amount in the appropriation account because profit and loss goes to appropriation and not retained income. Okay, so we need to first calculate what our retained income balance at the end of the year is in the appropriation account before we can transfer it to retained income over here. Now this amount and this amount are the same. Okay, the balance that we carry down for the next financial year will be the same as our amount of appropriation on the credit side. All right, now let's just quickly take a look at the notes. Okay, we spoke about the shares being issued, of course, over here. Okay, or authorized shares. Okay, a company can have a certain amount of shares that they are authorized to sell. Okay, so they can have 2 million shares. They're not allowed to go over this amount. They can only sell 2 million shares. Okay, but a company also wants to keep record of how many shares they have issued to make sure that they don't go over that quota. All right, so we record how many shares were issued at the beginning of the financial year and what the total value or amount of those shares are worth. Okay, but we can also sell additional shares, okay, and work out the total value of those shares. And then we can repurchase shares. Okay, now here's where it gets complicated. All right, because in our ordinary share capital we use a portion of our ordinary share capital to repurchase the shares, and we use a portion of our retained income to repurchase the shares. Okay, right, so we know that this cannot be a negative balance, and I already explained this. Cut that out. Yeah. Now, if we have a look here, we will always start off for shareholders for dividends. We'll always start off with a balance as well, because this is what we owe our shareholders from the previous financial year. Okay. On the debit side, we would have bank because we've now paid our shareholders what we've owed them from the previous year. Okay. Now, we would also have ordinary share dividends, which is our dividends that is declared but we haven't paid yet. Okay, so shareholders for dividends is an account that shows us what we still owe our shareholders. Okay, This will be transferred to ordinary share dividends on this side, okay, because we will pay an interim dividends, or we'll declare and pay on the same day, which will affect our bank, so it's already paid, right? However, we also owe our shareholders their money still. Okay, so we still owe them a certain amount, right? So this would go to ordinary share dividends, which would then close off to the appropriation account. Now this amount over here, would be this plus that, okay? Then we transfer it off over to our appropriation account, okay? Now take note that profit and loss is shown in the appropriation account. So this is our net profit over here, okay? This is our retained income that we have left, okay? So we would add these two amounts together over here, all right? Now this is what we still owe our shareholders, okay? So this is what we still owe our shareholders. So if we would subtract it from this amount to give us our retained income balance at the end of the year. So this is how much retained income we would have left, okay, or what we would have for that we have retained once we've paid everything. So we can choose what we want to do with this amount, okay. Now sometimes they will also ask us to calculate the net asset value, okay, or the NAV, okay. And how do we do this? We say shareholders' equity divided by the number of shares. So this would be the ordinary share capital balance at the end of the year plus the retained income balance at the end of the year divided by the total number of shares issued at the end of the year. Alright, so keep that in mind. Now let's just quickly take a look at an example. They do tell us to prepare the ledger accounts, but we're just going to go over them quickly because we are going to focus more on the notes than anything else. Alright. So Zoe's Aquarium has an authorized share capital comprising of 3 million shares. The financial year ends on the 28th of April 2020. Alright, so we need to prepare the following ledger accounts as well as note 7 and note 8, and then also calculate the net asset value. Alright. Let's see here, they give us information, they give us the balances for the beginning of the year. So these are the balances that we are going to bring down of 6 million rand, 720,000, and they didn't give us the balance for, that we owe our shareholders for the previous year, okay? Somewhere in our additional information they will tell us though, okay? So it says the amount due for dividends to shareholders was paid on the 31st of March 2019. So this is affecting this over here. Okay, let's still take a look. Ordinary shares in issue on the 1st of March 2019 were 3 rand. Okay, so per share. Alright, so we would take the 6 million rand here divided by the 3 rand to give us 2 million shares in issue. So that's how many shares we had in issue. Okay. The previous accounting period ended with a final dividends of 30 cents per share. Okay, so we need to now know that on the 1st of March we started with, for this financial year, we started with 2 million shares. Okay, so we would take our 2 million shares times by the 30 cents per share to give us our dividends that we have paid now. Alright, so it will give us this opening balance over here. Alright, it also tells us that an interim dividends of 20 cents per share was declared and paid on the 1st of October 2019. So that's perfect. So we would still use our 2 million shares because we didn't issue any additional shares within that time frame. Alright, we also didn't repurchase any shares within that time frame. Then it tells us on the 15th of October, the company bought back 100,000 shares at a purchase price of 7 rand. So this is our market value. Alright. The company then issued a further 400,000 shares at 8 rand per share on the 1st of January 2020. And then a final dividend of 20 cents per share was declared on the 29th of February 2020. They also tell us the total tax liability for the year amounted to 528, and that the income tax is calculated on 30% of the net profits. Okay, so this allows us to calculate our profits before after tax. Okay, so this amount here allows us to calculate what our profit is, and then we would subtract the 528 from our profit to get net profit after tax. Alright, let's move on and have a look at the ledger accounts quickly. So we filled in our balances that was given to us. Then we work out our shares that we have in issue, which is 2 million. Okay, from that 2 million, we would then calculate what our average price is, which is 3 Rand. Okay, so we took 3 Rand per share. We took 3 Rand of our ordinary share capital, which is obviously associated to per share. So 3 Rand per share from our ordinary share capital to buy 100,000 shares back. Okay, so we would have our 100 times 3 Rand to give us the 300,000. So we use 300,000 Rand of our ordinary share capital to buy the shares, shares back. Okay. However, we aren't finished, because we now need to find out what the difference is, what our balance is, and this is the amount we're going to take from our retained income. So the retained repurchase price is the market price minus the average price. So it's the 7 Rand minus the 3 Rand to give you 4 Rand. So for every share we bought back, we used 4 Rand of our retained income. Alright, so we would say the 100 times the 4 to give us the 400,000. Now how you check that you're right is you take the 100,000 times it by the market price to give us an amount. Okay, to check yourself to make sure that the amount equals, okay, that the two amounts equal, right? You take the 300,000 plus the 400,000 to give you the 700,000, and do these two amounts match? Yes, they do. Alright. Now, we want to work out what our balance of our retained income is now, okay? So we would take the balance retained at the beginning of the year, subtract the total difference between the price of shares repurchased and the average price. So that would be the 720 minus the 400,000 to give us the 320,000. Okay. Now we can fill in our appropriation over here on this side. However, we cannot calculate the amount yet because we need to first see what our profit and loss is, etc. Alright, so we're just going to move on. Before we move on to the appropriation account, we are going to have a look at we also have to take into consideration that we also issued further shares throughout the financial year. Okay, so on the 1st of January we issued shares, so therefore we receive money, so it's going to be bank, and the total value of these shares. Okay, now we need to balance the account. We need to balance ordinary share capital, so we look which side is bigger. So of course this side is the bigger side, so we would balance the account and find the difference to get our balance that we need to carry down for the next financial year. Alright, okay, now let's have a look at our other ledger accounts. So on the 1st of March they told us that we had 2 million shares issued. Okay, but then they told us that a 30%, I think it was 30 cents per share, yes, it was 30 cents per share, was our final dividends for the previous financial year. Okay, so that was our final dividends. Okay, but it told us that we paid the dividends on the 31st of March, the outstanding dividends. Okay, so that amount would be the 600,000 that we owed them, and now we've paid them that 600,000, the 600,000 out of our business for the shares. Okay, so we've paid our final dividends. Okay, now they also tell us that we declared and paid an interim dividends on the 1st of October. So we'll take our 2 million, times it by the 20%, okay, which gives us the 400,000. Okay, we would then also take our 460,000. And how did I get this 460,000? Well, I said, because they told us on the 29th of February that there was we declared interim dividends, I think of 20 cents per share, if I'm not mistaken. Okay, we had in total, when we calculated how many shares we had in issue, in total we had 2.3 million shares in issue. So we would take the 2.3 million times it by the 20% to give us the 460,000, and this is what we owe our shareholders in the next financial year. Okay, this amount will then come off our retained income. Don't forget that. Okay, so this over here, the 400,000 and the 460,000 need to give us the 860,000 that we transfer to our appropriation account. Okay, so in our appropriation account we will have there we go. In our appropriation account, we will obviously have the 860,000 Rand that we've transferred. Right. Now, to get our profit and loss, to get our net profit before tax, okay, we would take the 528,000 Rand that we've used, that was our tax for the year, our income tax, times it by the 100 over the 30% to give us 1.760 million Rand for profit and loss, okay? We would then put it on the credit side, and on the debit side we would put our income tax, because it's going to decrease the amount that we have left over to retained. Okay, ordinary share dividends would decrease the amount we would have left over for retained income. Now our retained income that we have left over is 320,000, so we would add these two amounts together and subtract these two amounts. Well, we would add these two amounts together, see which side is bigger to tell us whether we could retain income or not. And of course we can. We balance both sides, okay, and we would have retained income at the end of the year of 692,000. So this is how much we retained at the end of the year. Then we can use the 692,000 to decide what we want to spend. So then we mustn't forget, in retained income we put the 692,000 in, we balance the account, we get balance carried down 692, balance brought down 692, and Bob's your uncle. Alright, if they don't give us an appropriation account, we can always say the balance at the beginning of the year plus the net profit after tax, which is calculated, we can use a formula which is we just calculate, minus the total dividends of the year, which gives us the 692,000. Okay, let's take a look at note 7 quickly. This is the one that we need to focus on. So we've entered in our 3 million authorized shares. Okay, it told us that at the beginning of the year we had 6 million rands worth of shares valued at 3 rand per share. So we take the 6 million divided by the 3 rand to give us how many shares were in issue, and that was 2 million. Okay, please take note, when doing ordinary share capital, whatever takes place first needs to appear first, because otherwise it will affect your average price. Okay, so in this case we repurchase shares first before we issued any shares. Okay, so we repurchased 100,000 shares. Alright, at 3 rand per share. How did we get to that 3 rand? We of course said our average price. Okay, so we took our average price, which it said to us that we repurchased 100,000 shares at 7 rand per share. Okay, to get our average price, we took the 6 million rand divided by the 2 million shares to give us the average price of 3 rand. So we take the 100,000 times the 3 rand to give us 300,000. Now, keeping in mind, repurchasing of shares decreases our ordinary share capital. Right. Now we issued shares. Okay, 400,000 shares were issued on the 1st of January 2020 at 8 rand per share. So that's 3.2 million rand. Then to get our amounts at the end of the year, we add up and subtract our issued, add up and subtract our totals to give us our amounts. And now we need to calculate what our shares in issued at the end of the year are valued at. Okay, so we say the 8,900,000 divided by the 2,300,000 to give us the 3 rand and 87 rand per share. Alright, retained income, just let's have a look. Okay, we have the balance which was given to us. Here we would calculate our net profit after tax using that formula I showed you, the 528 times 100 over 30 to give you the net profit before tax. Then we subtract our tax from it to get our net profit after tax. Okay. The repurchase of shares is the 100,000 times the market price minus the average. Okay. So for every share we bought back, we used 4 Rand of our retained income. Okay. So that will give us 400,000. Then our total dividends for the year, we have interim, so we had 2 million shares times the 20 cents to give us the 400,000, and then we declared a final dividends on 2.3 million shares at 20 cents per share to give us our 460, and that will total up to 860, right? To get our balance at the end of the year, we say 720,000 plus 1,232,000 minus 400,000 minus 860,000 to give us the 692,000. Right. Now they tell us to calculate the net asset value. Okay, so this is shareholders' equity over the number of shares. Okay, so at the end of our notes we had 8.9 million and 692,000. So we add these two amounts together, divided by the number of shares in issue at the end of the year, which was 2.3 million, to give us a net assets value of 4 Rand and 17 cents. I hope this video has helped you guys understand retained income and ordinary share capital better. I will be doing a video on SARS income tax next. So yes, please can you guys like and subscribe and share the video to your friends who may need help. I hope that you guys have an amazing day further. Stay lit, stay real, stay humble, stay safe, and I'll see you guys in the next video. Peace out.